vendor finance, otherwise known as rent to buy or rent to own. I'll just take a few minutes to explain what it is, how it works, and answer some commonly asked questions so that you can determine whether this is going to be something for you. Now, there are a lot of people out there who are closed out of the property market because they can't get themselves a bank loan, and people can find it very frustrating because it's going to take them such a long time to save up all that money they need in order to get themselves a loan and make sure they have a good credit rating and meet all the other bank's qualifying criteria so that they can buy themselves their own home. Most of these people don't realise that they can still have home ownership even without a bank loan if they can find themselves a seller who is prepared to give them vendor finance or rent to own. My wife and I first started buying and selling houses with rent to own back in 2004. We found it a terrific system, and we've made a lot of people happy by giving them their own home ownership when they thought they were closed out of the property market by the banking system. So you're probably wondering, how does rent to own actually work? Well, I'm going to explain it by first comparing it with the regular system that most people are familiar with. Let's say this is the house that you wanted to buy. Let's say it's worth about $300,000. Here's the seller, or the vendor, and here's his real estate agent. Basically, in the usual system, what they're putting out there to the market is this. If you want to buy my house, this house right here, then you'll need to pay me the full amount, $300,000, all in one go at the time of settlement. Now, most people just don't have that kind of money sitting around in their bank account, so what they're going to need to do is go to the bank to see if they can get themselves a bank loan. As long as they have good credit and they can afford the deposit and all the rest of it, they can get the bank loan and they can pay the vendor and his agent. So then they'll have their own home along with the loan from the bank, and they'll be making payments to the bank every month over time. So that's basically how the system works. Now, that's all very good if you can get yourself a bank loan, but if you can't, then that's where vendor finance or rent to own can be a really incredible thing for you and help you into the property market starting right away. Now, here's how it works. I'll show you the difference. With vendor finance, we do away with the need for the bank, and we usually do away with the agents as well. What we have is just the seller of the house and the buyer of the house. So in this instance, what the seller is saying is basically this. I'm not going to require you to pay the full amount of the house, the $300,000, all in one go. So you won't need to go and get a bank loan, don't worry about that. I'm happy for you to give me a deposit to get started, not necessarily the 10% either, like the banks. You need to give me some deposit, and we'll put some paperwork in place to make it all legal, and you can make the payments to me over time just like you would with the bank. The only difference is, instead of making the payments to the bank over time, you'll be making the payments directly to me. Now, generally, the seller will be charging a slightly higher interest rate, much like a low doc loan or a no doc loan, but most people take this as a short-term bridging over situation until they can refinance to a regular bank loan in 2 to 3 years' time. The buyer will have all the same rights and responsibilities as they would with a regular bank loan. They can refinance at any time, they can sell the property, they can sublet the property, or they can keep it going until they're ready to do something else. It's completely up to them. So what sort of people normally like to use rent to own or vendor finance? Well, we find this mostly applies to people who may have an impaired credit rating, they may not have enough deposit money yet, they may be self-employed, they might not be able to prove all of their income, they might be new immigrants, or they might be just investors who are getting too limited by the banks and want to continue to expand their property portfolio. So it can really be anyone. It could be first home buyers, it could be people who are getting back into the property market for the second time, or it might be just investors. Now, if you're unable to get a bank loan today, there's basically two ways to go. You can wait until you have enough money and a clean credit record and you're able to meet all the qualifying criteria of the banks, or you can use rent to own or vendor finance and start buying your own home today. So let's just compare them side by side. Okay, so let's have a look at someone who's deciding that they're going to continue renting and they're going to wait until they can qualify for a regular bank loan. Okay, so what's going to happen for them? Basically, they'll need to save up enough money so that they can get the 10% deposit plus the stamp duty and the mortgage insurance and all the legal fees and bank fees. So for this basic $300,000 house, they really need about $50,000 just to get started and cover the deposit and all the other costs so that they can buy the house. Until they have that sort of money together, there's really not going to be any point in them even talking to the bank, because the bank won't be able to give them the loan. For a lot of people, this is going to take a good 3 to 4 years to save up, or even longer, and that's if you can save at a rate of $1,000 to $1,500 per month. Another thing that often gets in the way is an impaired credit rating. There might be something that happened a couple of years ago, it might be all resolved and sorted out now, but still the banks are not willing to lend you any money because there's a black mark against your credit record. So here's our little guy. He's waited here all this time so he could save up all the money. He's made sure he has a good credit record and he can meet all the other qualifying criteria of the banks. So great, now he can get a bank loan and he can buy his house. But what do you think's happened to the property market in the meantime after all this time? Yeah, it's moved on. If you're going to have to wait another 3 to 4 years to buy your own home, the market will have surely gone up by then, anywhere from 20% to 30%, even 40%. So for this $300,000 house, you'd be looking at paying an extra $50,000 to another $100,000 more just because you had to wait. And if it takes you longer, up to 5 or 6 years, it's going to be more again. And there you are, paying all this extra money just because you have to wait to fit in with the regular banking system. And all this time you're waiting, you're still a renter, you're paying all this money into something you're never going to own, and you have all the disadvantages that go along with being a renter and you're not being a home owner. Now, what's it look like when you buy property using vendor finance? Well, basically that means you can start being a home owner today. You can get in with a smaller upfront deposit. You don't have to meet the bank's stringent qualifying criteria, you just have to satisfy the seller. And at this stage, you also don't have to pay the stamp duty, the mortgage insurance, or any of these other bank fees or legal fees or any of these other costs. And you'll lock in the house at today's prices. And you can still get the first home owner's grant before it runs out. Then, as you live there, you're just like any other home owner. You can make your place your own, and your payments are going towards paying off the house. You can make improvements to the house to improve its value, and any capital growth that's gained in the property is yours to keep. Finally, when you're ready, you can refinance back into a regular bank loan. At that time, it becomes a lot easier because you're established with a good credit history. And generally, you won't need to pay an additional deposit. In fact, it's quite possible after just 2 to 3 years with improved capital gain, paying the property down, you'll have a good 20% equity in the property, which will make it much, much easier to get a bank loan, and you won't have to pay the mortgage insurance. So that's really what it's all about. It's all about starting your own home ownership today. You can stop being a renter and save yourself from running behind the market. You can get the capital growth in the property and make it your own. It's really as simple as that. That's why vendor finance is such a useful system for people, because it really gives them a leg up into the property market that would have otherwise taken them years and years to get into, if at all. Over the years, my wife and I have seen a lot of happy people who can get home ownership this way, and they didn't even know that they could do it. There really are a lot of advantages with rent to own, and it makes a lot of sense financially. You can stop paying dead rent money right away, and you can start immediately on the path of being a homeowner without all the waiting and saving.